Hey guys, what's going on? Hopefully you're doing well. So I wanted to talk about Ethereum Bitcoin. I'm just about to head to bed actually, but I wanted to get these thoughts out, and I thought shooting a video, which I'm going to do more of in the future. So I often have lots of thoughts and ideas that I do try to express and convey through text with the signals and the market analysis, but sometimes it's best just to discuss my thoughts in a video. So here we go. So here we have Ethereum Bitcoin on Binance on the daily chart. And my thoughts are this. So my thoughts are, we have this bullish order block that's just been disrespected, right? Why is this a bullish order block? Because it is the lowest down candle before a shift in market structure. Okay, so we have a bottom, we have a shift in market structure, which makes this a targetable bullish order block, right? And what have we done now? We've actually broken down through it, and it looks like the daily wants to close below. More on that here in just a minute, and I'll explain these X's here. But what that means is that when a level of support has been broken, and why is it a level of support? Obviously, because it's an area where the market bottomed. It also fits the qualifications for a bullish order block. Why? Because this is where the orders, the limit orders of the limit orders of market moving institutional order flow got filled. And this is where retail and the rest of the market aggressively bought in, and we saw price appreciation. But this definitely, the psychological reason for understanding this area is important, because this is where price bottomed, and we need to understand what that means in terms of liquidity, in terms of the market. This is where many limit buy orders were filled, and where aggressive buying began, which led to price appreciation. So Ethereum Bitcoin has been in a strong downtrend for quite a while. And we can just see this clearly with the help of some simple moving averages, or exponential moving averages, but simple exponential moving averages. Hopefully you understand what I mean by that. So I've been experimenting and back testing with the 13 and the 55 exponential moving average. And as you guys know, this is just some uses of CCEMA, which is the script that you guys can use on TradingView. But as you can see here, where price is relative to the 13 exponential moving average and the 55 exponential moving average is pretty indicative for getting your directional bias, right? We talked about many ways to determine a directional bias, and this is quite a simple method, but one that's eloquent and powerful. So, in the realm of KISS, keep it simple for success. So, breaking this down into some further price action analysis, we want to talk about liquidity and where liquidity is likely in the market, right? So anytime that we print something like highs, or especially equal highs, we know that there's going to be a lot of liquidity there, because that is a logical area for retail traders to set their stop loss, right? So, one example is right here on the chart. So just going back a few days, about half a week now, or a week, we have these two equal highs that were never rated. So we know that there's a lot of liquidity up here, right? There's going to be resting limit sell orders. There's going to be stop buy orders to buy into a breakout. This is also a logical place where any retail trader would have their stop loss set. And this would have been a great area to test for a short entry after the close of this daily candle, right? This area right here in the not 33.48 region, let's say. So keeping that in mind, we also know that anywhere below low price tails, there's also going to be a lot of liquidity as well. So where are we at right now in relation to everything that's going on? Well, we're testing this area right here. So directly below this long price tail. And there's a good possibility that there's liquidity right here, because again, it's a likely area that anybody would set Hail Mary bids. It's a likely area where anybody would set stop losses as well if they were trading anywhere inside this range, would be below the low of this price tail, because we know that above price tails and below price tails, there's lots of liquidity. It's just people's eyes are drawn to those areas to set buys and sells, as well as stop losses. So where we're currently trading right now is beneath the bullish order block, which if the daily closes below, will turn this into a bearish breaker, right? Meaning that we can utilize this zone right here in between not 306 and not 310 to have limit sells, to have limit orders to sell. into the market. And where would be our first area to target? Well, I would posit that this would be a good area to target. Why? And in fact, this is the area that I want to point out more clearly and succinctly, because we have two almost equal price tails right here. Okay, what does that mean? That directly below this area or at this level, there's likely to be a lot of liquidity, right? Because we have two equal lows that have not been rated, have not been tested for liquidity. So a couple strategies for managing this position. So first off, let's focus on a short entry and then let's focus on a potential long. So the potential short entry would be very simple. We have this bullish order block that has been transformed into a bearish breaker. Why? Because this was an area of support that has been disrespected. We have broken through that level of support. And so we would look to revisit that area and have limit sells placed to take advantage of the support and resistance flip or the nature of a bearish breaker. So it's important to understand that the idea and concept that I talk about with order blocks and breakers is just an advanced concept of support and resistance flip. So if you guys have watched the webinar, the premium webinar on SR flips and horizontal support and resistance, you guys will see in that video how I explain how support and resistance works and how you can practically use it to trade. So this is just an advanced concept of understanding that. And by advanced, what I really mean is not better or, more algorithmic or more complicated. In fact, it's quite simple, actually. It's just a system with rules. And what that means for you in trading is that this is a method and a system that you can apply a strategy to. Like this becomes tradable because you are actually implementing rules that you can follow every single time pursuant to the if this, then that methodology that we practice here. So having limit sells in this having limit sells in this breaker, in this previously bullish order block, is the statistically correct setup to do. And where are you targeting for? And the reason, what further confirms this is that we are in a strong bearish downtrend. And again, the trend is your friend until the bend at the end. So we are beneath the 13 daily exponential moving average. We are beneath the 55 daily exponential moving average. And we are beneath, and we've also seen a bearish cross under of the 13 and the 55, letting us know that the meso time frames are bearish. So there's no reason to necessarily bank on a reversal of the trend. However, we can take advantage of liquidity plays to take a reversal trade to the upside. But we're not looking for a strong trending trade in one direction or the other. And we've talked about using Wada and time transformation for identifying a strong trending trade. So for the purposes of this video, we're just going to be focusing on the price action analysis of what you can do with Ethereum Bitcoin. So the first option is obviously to have limit sell orders scattered in this area, and we'd just be using your standard 20-30-50 split or 10-20-30-40. We've talked about this before. If you guys haven't seen that post, make sure that you scroll back through the resources channel, and I lay out the rules for scaling into a position effectively. So having limit sell orders to take advantage of a retest of a support resistance flip upon the breakdown of lows, upon the breakdown of previous support is a good effective strategy to take. The alternative, if you wanted to be highly aggressive and positional with your trade, you could attempt to take a short now. The margins are fairly low because a retracement to execute your stop loss is going to be somewhere in the order of 2 to 3%. Okay, so if you're position sizing appropriately, this would not be a bad setup. If you wanted to aggressively enter into the price action right now. Now, the reason why I would be hesitant about that, or not say, I'm not telling you not to do it, because it could end up being a good trade based on the momentum short breaking through resistance support. Now, generally, that's not something that you want to do. It's something that's on the table. It's something that you want to back test with exactly the way that you do it. We don't want to be shorting support, and we don't want to be longing resistance more often than not. But if you have a plan to average in from, say, here to here, on the off chance that price does not revisit this area, which it might not, before moving further down, that potential is on the table. So just make sure that you're trading safely and that you are position sizing appropriately, because this thing does have the potential to retrace, like I said, 2 to 3%, potentially even a little bit more, potentially back here to the 13 EMA and this previous low. Before moving down further, which would be an invalidation of this zone, and so you'd be out earlier. That's the beauty of not having to let a trade hit your stop loss, is having a rule for, okay, what is going to invalidate my trading thesis? And for this, it would be a daily close back above this order block, right? And then you're just waiting. You're waiting again for price to reclose below this and then confirm the continuation of the downtrend. Why? Because you would have posited a break of support, a fake out essentially, right? Because price would then close back above your order block, but would not close higher than this high. So you'd still be forming a lower high, and then price would continue and trade below this order block, which would be good. That would be a good qualification for a momentum short. Why? Because you typically don't want a momentum short on the first break of support because the potential to get faked out does happen. But the confirmation of that support being broken. So again, the market is generous with second and third tries, but not with fourth and fifth. So price closing back above, you're sitting on your hands. And then if price does close back below that order block, then you are okay. You're safer to momentum short down to our area of support here. But this is the more important area that I want to talk about. And this area right here is, I think, very interesting in the Ethereum Bitcoin chart, because we have this attempted break in market structure, right? So we have a strong downtrend here back in November of 2018. Price puts in a time transformation buy signal. Why? Because we're oversold. The market attempts to reverse. It does it again here. But these were fake outs. These weren't. This was an area where you did not want to trade against the trend, or the trade was on the table, especially on the lower time frames. So always keep in mind of the confirmations that you want to get and the risk that you're taking a reversal trade in the first place. Because when they do pan out, you get beautiful signals from time transformation. Like for example here, and for example here, and for example here, for example. But you always want to be, the reason why we want to be position sizing appropriately is because we do have the potential to get false signals when price is trending very strongly, right? So we want to have a system that mitigates our losses because when we do get a nice, beautiful entry, we're going to be entering near the bottom of the market and being able to take advantage. Like for example, this was a beautiful short right here. This is just where time transformation called it beautifully. Short here at the top. And then exit and entry into a long on the way down, and then exit into a short. You have a little bit of drawdown, and then price moves in favor beautifully. So, so the short from the bearish breaker. But another reason why I would be a little hesitant is I want to see how the daily closes this evening, because again, we are testing potential liquidity, and as you can see, price is struggling here a little bit. Now, we'll see how well this video ages if we wake up tomorrow and Ethereum just gone, or if Ethereum just gone, but those are the chances that you have to take when trying to execute a profitable trade. You just have to look for what statistically has likelihood to work, what is congruent with the strategy that you have built, and how can we do this effectively and appropriately. So again, liquidity here that is now being tested for the first time. But you can see that we had liquidity here and the market just didn't care. It just kept rip-roaring right through these things. And we'll take a look at some fundamental data on tomorrow's show, like USDT dominance. We'll look at Bitcoin dominance, Ethereum dominance, longs to shorts, and we'll see that overall things do not look good for the market in general. But when we're looking for a potential good entry, now I want to talk about this area here. So we have two lows that have been untested by the market, right? This price area hasn't been tested since early this year, so January 2019. And this level also is coinciding again with this initial fake out. This same, I talked about this earlier, an area in the chart, an area in the market where we have this strong downtrend. And right here, buyers attempt to step in. They attempt to step in right here. Ultimately, the sellers take control of the market and push price to its low back in December of 2018. But we can see that although price is trending nicely, look where it actually just goes completely parabolic. And that's actually right here when you get over this area, just as we talked about with that $4,000 level with Bitcoin. So Bitcoin was in a strong downtrend on the weekly chart, and then we put in a bullish week. And that is an area of the market where where the buyers sense the weakness in the bulls. As we can see, that area is denoted just generally by this zone right here that I've gone a little bit more strategic with in plotting out these two horizontals so that my entry zone is more well defined, and that gives me the ability to manage my risk much more effectively. So I would be very interested in utilizing this area right here as a take profit zone for any short that we are lucky enough to get filled here. So that's going to be a nice 4 to 5% trade right there. And we're going to talk about how to correlate this over to the BitMEX chart, because this would be ETHM19. We're going to have to be trading the futures because this is not going to be correlating directly to the Ethereum to the dollar. So this is not a trade setup for the perpetual contract. This is going to be for the futures contract for Ethereum on BitMEX. So I'd be highly interested in utilizing this area as a take profit level for short entries that we get filled here. And I would also be interested in this area to have limit buy orders to attempt to take advantage of the reversal should it happen, right? I don't want to see the daily close below this level. Then we're just waiting for price to revisit at some point in time. Again, it's a reversal trade, so more riskier than a trend trade by nature because we're going to have less confirmations that are going to be confluent. So it is tricky and difficult to find something to confirm a reversal because you are essentially betting against the dominant trend, right? And when the market is trending and not consolidating, as we can see here, it's more risky to take a reversal trade when the market is trending strongly, especially when we're on the potential of seeing strong continuation of the downtrend. So what I would say is the best setup is to have limit sells here to take advantage of this breaker. And we've talked about what happens if price closes above. We exit the trade and wait for price to reclose below for confirmation. Look at this zone to be taking our 50% profit and moving our stop loss to break even. And then if we do happen to get a bullish reaction, to be exiting the trade and looking to long. And where would my first target be? This zone right here, the revisit of the bearish breaker. But should we close above, I would be targeting these equal highs up here for the tested liquidity. Should price either V-bottom or consolidate in these levels and break to the upside. So those are my thoughts on Ethereum. We'll flesh these out a little bit more, but I just wanted to give you guys an idea of the levels in the market that I'm looking at. You guys can see the price numbers on the side here, and I can post a chart if you would like me to, but I think I'm going to start doing these videos for the premium members a little bit more frequently because it's just easier for me to get my thoughts of the market out and what I'm actively targeting and looking at. So just for further clarification, I'd be looking for a short from here and a potential long from here with a stop loss slightly below. Again, you guys know that I'd be using a soft stop loss and targeting the liquidity above, which allows me to manage my risk quite nicely. So I don't want to see the daily close below this level, so that's not 0.293. I don't want to see price close below that level, but if we, and again, I would be targeting the bearish breaker for my initial take profits, which is still a good trade setup. And we're talking about very low risk. We're talking about maybe 1.5 to 2.5% risk for a potential payoff of 13%. Now, nothing going as far as a trending indicator. We don't see any signs of trend reversal at this point in time. So we'll be looking to take that trending trade again, as I said earlier in the market update. When altcoins trend, they tend to trend hard, but we've been trending to the downside since February of 2019 here in Ethereum Bitcoin. So when we're talking about areas where the market is likely to reverse, as we can see here, this area congrues nicely. I could see the justification of moving this down a little bit more and taking advantage of this bullish breaker right here. Because as you can see, this is the last down candle before a shift in market structure. It's broken through and then broken through again to the upside. So we've talked about all that in the support and resistance video, how to actually utilize levels that were once support or once resistance and what to do when they break and how to reincorporate them into your trading strategy. But I think I'm going to end that. I think I'm going to end this video with that for right now. If you guys have any questions, please post them in the Discord. And let me see your Ethereum charts, guys. Let me know what you think. Is your analysis congruent with this? Do you have any thoughts, comments, opinions, sarcastic remarks? I'd love to hear them, guys. So until then, I'll see you tomorrow on the live show. Trade safely, guys.